There we go. Let's click on that 5-wave impulses. Now, I mentioned to you this is not an exact science, but usually about, I think 70, 80, 85% of the time, you're going to be able to see these types of impulse waves developing in the market. You can see them on almost any time frame chart from 1 minute clear up to monthly. And you will want to learn how to be looking at all those different time frames of charts to get perspective on the different fractals we'll talk about in a minute. But here is the basic structure of an Elliott wave count. It has wave 1, 2, 3, 4, and 5. Then it comes down A, B, and C in a corrective wave. All right? So here is the impulse wave, 5-wave pattern for impulse, 3-wave pattern down for a corrective wave, 8-wave cycle. Remember, it's an 8-wave basic cycle, and then it repeats itself all over again. You'll see this 1, 2, 3, 4, 5 A, B, C formation happen again and again and again repetitively in the market at all different wave levels or lengths at all different time frames on your charts. Now, the challenging part about it is that it doesn't unfold identically every time. It's a pattern that has many different potential formations, and we're going to be talking about how you can learn to recognize the differences and anticipate the differences in those formations as we go along. All right, remember this 8-wave basic cycle. Let's close this one up and go on then to identifying a trend, okay? Now, the basic pattern is the trend. When the impulse pattern is moving in its 5-wave cycle, that's the direction in which we're trending, for at least for the moment. Trends change. Some trends take much longer to end than others, but in the 1, 2, 3, 4, 5-wave cycle is the direction in which the trend is moving. Remember that whenever you're in a 3-wave corrective cycle, that's just the trend consolidating. A trend has to be progressive. Certain waves are not going to be able to fall back beneath the origination of other wavelengths without changing the entire trend. Just because you have a correctional cycle doesn't mean your trend is necessarily changing. For instance, in this wave 2 right here, there's going to be a correctional cycle. Also in this wave 4. We'll talk more about those in detail coming up. So let's close this up and go on to the next section. Identifying the counter trend. Now, the counter trend is the corrective trend. The counter trend happens here always in an ABC formation. Now, these can become rather complex as they unfold in different formations, but in the end, you'll find that it's always in a type of an A, B, C, or a zigzag type of formation like this. You'll find it in wave 2, wave 4, and post wave 5. These are your counter trends, okay? These happen not only when you're going long in an uptrend, but it also happens in the opposite when you're going short in a downtrend. All right, let's go on to the next. Close this up right here, and let's open the live charts. These live charts are not just simple diagrams, okay? We're starting to see to see more of the detail of what it would look like in a real chart, okay? First, let's take a look here. You see all of these waves right in here? These are subwaves inside of a wave 1. And then you have wave 2 and its subwaves here. And then wave 3, a little longer than wave 1, and it's full of subwaves. Here is a simple A, B, and a C pattern in wave 4. Then it goes to 5, and then you have your A, B, C pattern following. Now, this is not quite as simple to read as the diagram was that we just went through, is it? Understand, you're going to get all of these types of patterns unfolding, and they will change and shift and adjust. Your eyes need to become adjusted to being able to read variations of this 8-wave cycle as it unfolds in real time. All right, there must be 5 subwaves in an impulse wave. All right, if this entire wave is the impulse wave here, and it is, this is your impulse side of the 8-wave cycle, there's got to be 5 waves within it in order for it to qualify as a true impulse wave cycle. If you only have a 1, 2, and a 3, and then it changes and comes down below a certain point here, well, something's wrong. It's not an impulse. You might mistake it as an impulse at first, but it's probably not. And there's many other formations that in the future we'll talk about to identify. Let's just stay basic right now. There must be 3 subwaves in the correction. Well, you see 3 here that we've identified in this chart. You're going to have to learn how to become familiar with that. In this case, you've got an ABC within this A wave, then an ABC in this B wave, and then you have 1, 2, 3, 4, 5 in that C wave right there. There are subwaves within the whole pattern. But in order for it to be a corrective wave, there has to be 3 or ABC major waves within it, all right? And those subwaves. Don't mistake waves 1, 2, 3 for an ABC, or vice versa. Like I said here, wave 1, 2, and 3 can sometimes look like ABC, and if you don't get a 4 and a 5, then you're looking probably at a type of a corrective wave pattern. If you don't get a full ABC and then move on to a new impulse trend after that, then this is probably not an ABC, but the change of a new trend. All right? So remember, you need to have these types of components, 1, 2, 3, 4, 5, to qualify as an impulse wave, and ABC to qualify always in the subwaves of a corrective wave. Now, close this up and move on to the next spot here.